Take Solutions. Now, we thought we'll discuss the traction that they're seeing in the life sciences business, get in a sense of their deal pipeline, order book, and margin trajectory from here onwards. HR Srinivasan, the VC and MD at Take Solutions, joins us on the show right now. Mr. Srinivasan, you're a niche tech company engaged in top global pharma players. Life sciences is the bread and butter business for you, accounting for a good 91% of your revenues, as I understand. And now global pharma trends as well are turning favorable. How are they shaping up for you, and what kind of growth visibility do you think you hope to achieve in the next quarter or next 6 months or so?
So I think the growth over the last 2 years has built up very nicely into a good order book. And as we look forward, I think we're looking at a growth rate that would be anywhere in the 23-24% for the current financial year and perhaps even for the next year. So the order book is built up nicely. The traction is very good. The North American markets are doing well, and the Asia, we've seen good traction in Asia as well.
Okay. Tell us about your top 10 accounts, because as we understand, they bring about 26% of your revenues. How are you seeing the change in their R&D spends? Which therapeutic areas are seeing more resource allocations and filings?
So first, the top 10 accounts for us will continue to hover in the 25-26% because there is a whole lot of phase 1 and phase 2 trials that actually take place in the small and medium pharma. So the spend of the small and medium pharma is not trivial as far as R&D is concerned. So that would continue to be a very important segment. In terms of therapeutic area, it is obviously oncology leads the way by a distance. And then there is central nervous system. I think these two constitute a very large portion of the R&D spend. Our own exposure to oncology is extremely high, and it's been a high growth area for several years for us in the past.
One has to understand the business model of Take Solution. What is the data point which we should look at? The reason why I'm asking you this question is because, when we analyze a company, when I analyze the model of TCS or I analyze the model of other IT companies, I look at the US economic data, I look at Accenture data points, I look at the BFSI spending. Since you are a unique company with a unique kind of a business model, what are the data points which we should look forward to?
I think one, and most importantly, you should look forward to the overall R&D spend in the pharma industry, not necessarily the R&D spend of the top 10 companies. Because if you actually look at that data point, while the overall R&D spend in pharma, biopharma is going up, the spend of the top 10 companies is coming down, which is why I called out an earlier data point that the small and mid caps are doing a lot of phase 1 and phase 2 trials. And then the molecule gets out-licensed to the larger pharma companies and they run with the commercialization phase. So core R&D spend is what you should be looking at. And in core R&D spend, then obviously you have spend by therapeutic areas. If you look at geographies, currently the top 3 geographies are the US, EU, and then Japan. But I would say that it's not too long before Asia Pacific replaces EU as a strong R&D, having a much stronger R&D pipeline.
Okay. All right, Mr. Srinivasan, appreciate your time. Thank you for joining us.